And we are live. Welcome along to the DePIN Coffee Hour, the very first episode, where we have a casual conversation with some coffee about all things DePIN and Web3, with the goal to edutain those who are new to the sector but eager to learn more. In our first episode, I am joined by Andrew Smith, our co-founder and CEO, and Rainier Bleeker, our partnerships manager for Havelo. So it's a full Havelo team today. Well, not the full team, but let's say plenty of Havelo peeps here. We may have some other guests joining. We're just waiting to see if they're going to make it or not. But in the meantime, let's crack on. Everybody's waited long enough. So welcome, gents. I suppose.
Cheers. Thank you.
Just start at the start. Like, who are you guys, and what's your backstory? Do you want to go first, Andrew, and then Rainier?
Sure. Yeah, definitely. I'm Andrew. I'm one of the co-founders here at Havelo. I've been working in the blockchain space so it was the end of 2013. So that's amazingly 12 years now. That sounds very, very odd to say that out loud. My experience has been primarily,
You're
it's
old.
like really, that's like really, really super old. For this space anyway. My experience prior to Havelo was I co-founded a payments on-ramp company called Bankster, which is one of the largest fiat to crypto and crypto to fiat on and off ramps in the world. I believe second only to MoonPay in volume. We started at the end of. Yeah, it's a really successful business. We started that in pretty much myself and Dominic, who's also one of the co-founders at Havelo. We started that in our office in Melbourne at the end of 2013. And we exited by listing on the Toronto Stock Exchange pretty much at the very start of the pandemic in 2020. So it was a very, very, very exciting, interesting ride. I like to say that I have all these grey hairs. Would not be here had I not decided to work in crypto and blockchain. I think that's
why Neil and I don't have hair anymore.
Yeah, well, I guess I guess if I had to choose, maybe it was okay. But anyway, so that's been my experience, was essentially in building the infrastructure around blockchain, particularly making it super simple for the everyday users, so what we call our Web2 users that are familiar with things like shopping on Amazon.com and applying that to Web3 technologies. And our philosophy at Bankster was, it really, to be able to give cryptocurrency and blockchain the biggest chance of success, it really had to feel as normal as buying something from Amazon or using your online banking, or something that people were already familiar with only very minimal amounts of, I guess, education for the users. So keeping it really, really simple, that was our philosophy. And with Havelo, we've taken the same philosophy again and applied it to DePIN, and specifically about users being able to contribute to different DePIN projects using their existing hardware, like your laptop or your desktop at home. So keeping it as simple as possible for the user to actually get on board. I might leave it there and hand it over to Renya. Otherwise, I'll sort of yap on about our mission.
Yeah,
we'll let
definitely.
More about that later as it's going on.
Definitely want to. I'd love to talk more about the early days of banks and what that was like, because 2013 was a very different time. Sorry, Rainier, for I'll give you a chance in a second, but just thinking back, I mean, I bought my first Bitcoin in 2013, and it was
me too.
like, I mean, we're not even talking in the same, like, people who just are new to the space today, no idea. Like the challenges of setting up private keys and encryption and stuff. I remember the hoops that I had to jump through at the time, and it was like really tricky to buy crypto. So I'm fascinated that, like, I mean, I still think it's tricky, somewhat tricky today, but compared to 2013, I mean, you guys must have been like, shit, this really sucks. Like, it has to be a really, like, I bet we could make it easier. I'm just very curious about what that was like when you and Dom were kind of hatching the plans at that very, very early stage. Like, was
Yeah,
it obvious, or?
look, it was kind of really, there's a few different facets to it. I think originally we were involved in actually mining Bitcoin as well. So we started with a couple of miners that Dom had acquired, and pretty much the crux of the business was, Dom coming, across the office to my desk saying, hey, I've been reading about this Bitcoin thing, and I spent all weekend reading about it. I'm really, really, really interested in it. I've bought these 2 miners. Can you have a look at it for me? See what you think. And that has, pretty much been Dom and my relationship to date. Is yeah, he sees things very, very early on before others see the big picture. And he comes and drags me in to get the kind of technical or commercial kind of appraisal of it, and that's why we work such a good team. We both have those kind of different core sets of skills, but essentially we had these miners, and we were mining Bitcoin, and the problem with mining Bitcoin back in 2013 and and beyond was you mine Bitcoin. While you're mining the Bitcoin, the difficulty level was going up and up and up because more people were starting to contribute. So essentially, more people are contributing, so there's sort of less to go around. So it was like a little bit of a treadmill. We were mining Bitcoin so that we could sell the Bitcoin and buy more mining equipment so that we could mine the Bitcoin, so that we could sell the Bitcoin so we could buy more mining equipment. And it becomes just like a treadmill that didn't seem to have a clear, I guess, exit at the time. But what we found was we set up a little website to sell the Bitcoin that we're mining to Australians. Because at the time, to trade or to buy, I would say trade Bitcoin, but even just to acquire Bitcoin, you could either mine it or you could buy it from what today we would refer to as an exchange. And at the time, the biggest exchange was an exchange in Japan called Mt. Gox. And if you know the story about Mt. Gox, that was one of the sort of super early successes and super early failures at the same time. So if you're in Australia in 2013, there's no TransferWise, there's no Revolut, there's no easy payment rails to different currencies. If you want to send money to your kid who's backpacking in Europe, you pay $30 Australian, which is about 20 US dollars, just to do that one transaction. It'll get there 3 days later, and you probably lose about 5% on the conversion as well, because the banks could do that, because it's, where else were you going to go, basically? So you put and when we're talking about Bitcoin, people are putting hundreds of dollars, thousands of dollars, potentially tens of thousands, if not more. So you had this, it was like a 3-day fear of just waiting. Like, is it going to make it to Japan? Do I even know? Is there actually somebody at the other end? Is it actually going to the right place? And it just, it was a terrible experience. So we started selling locally, and it took off. And that's where we sort of, that was a kind of crux of the start of Banks. It was just making it super simple to buy Bitcoin with local payment methods. Our first kind of advertising pitch was, get Bitcoin in 5 minutes or less. And that's one of the, I guess, principles that we sort of stuck to with Bankster is, there's plenty of methods to get it, cheaper if you're willing to wait 2 or 3 days, and potentially the risk of currency conversion sending to an exchange. But if you want it now, you can get it now, and get it from a local trusted provider, and get it quickly. And that was that was kind of crux of it.
Amazing.
Yeah,
I feel like in those early days. What's that, Rainier?
It was a hassle in 2013 to actually buy a Bitcoin. It was
yeah. It kind of actually, it's really funny because it actually, it's cyclical as well, right? So and this is something you mentioned, Neil, about private keys and like how did you do that back then? And what you kind of find is there's a couple of other companies that kind of set up. In fact, there was one company that started maybe 6 months before us, and they had this kind of dinky, one-page website. It was basically like, almost just text only, like send your money here, and we'll send you back, Bitcoin to your wallet address. Just drop your mess, drop your wallet address, and
the precursor
it was actually
the ICO. The precursor to the ICO. That sounds like the ICOs in the early days.
Yeah, I guess so.
Send us your Ethereum to this wallet address, and we'll send you it.
So it's kind of like it's kind of cyclical, because it started off being, okay, well, you can only mine Bitcoin. If you want to acquire it, you can only mine it, or somebody who already has it sends it to you. There wasn't really an easy way to buy it if you wanted to get involved, and didn't want to go to the expense of mining, particularly when Bitcoin moved from being able to be mined on your home computer to being actually having to buy specialist equipment. But what happens was, you sort of see it run forward in that, so we had these companies that just was basically like, put money in my bank account and I'll send you back Bitcoin. And so it kind of, it's pre KYC, it's pre having to like set up an account and a wallet and all these kind of things. And eventually the kind of banks I guess got wind of what was going on, and decided that they didn't really want to be in that business. So they curtailed all these kind of easy to buy places, and then it became harder. So it sort of runs into being really, really easy to do, and then suddenly gets harder. And I think you see that kind of repetition a lot in crypto. You see, if I think of perhaps the big NFT craze, which wasn't something that I wasn't particularly involved in myself, but it was like we've got these NFTs, we can trade them, it's fantastic, and everyone starts trading it, and then suddenly you get this kind of mass adoption of it, but then the network just can't keep up with the demand and the amount of data and bandwidth required to process these transactions. So then it becomes harder again, because it's like, okay, well, now I've got to pay $30 if I want to get my Ethereum based NFT minted and sent to me quicker. So it has this kind of like these super cycles, really, much in a way that the I guess the price volatility also really is kind of like on a hyper cycle. You also get the same kind of thing with the technology as well. It shoots off really quickly, and then you kind of have to like curtail it back. Yeah.
That's how it goes. Everything is a cycle. Rainier, do you want to give us your backstory? Tell us.
What do you want to know?
Well, you're an OG as well. You bought your first Bitcoin in 2013. How did you get into DePIN?
I had no clue what it was back then. Like when I bought it, I was like just pure speculation. I had no idea about decentralization, blockchain, about also I didn't really I remember not really deep diving into it back then. I was just buying Bitcoin and selling them, and like Andrew said, it was a very like a laggy kind of process where you had to send emails to like some kind of broker, and you bought some Bitcoin. Then you had Bitcoin in your wallet, but I'm not sure if you actually had Bitcoin in your wallet, right? A lot of them were just like numbers on a screen. But I made some money actually. I think I made a few like €1,000 back then. I have like emails from back then where I was buying Bitcoin for €800 or like 600 euros. Yeah, and I think I then left it alone for at least a good 3 or 4 years. So back in 2017, it got back on my radar, and then I really like got into the rabbit hole, of and got really passionate about it as well, about decentralization, building these, equitable systems, mainly like the equality and the censorship thing was really spoke to me back then. Still does, but was what kind of got me also from a more like core value kind of perspective, got me really hooked to the whole kind of ideology, so to speak. So I started like buying some tokens on the market. In DeFi summer, I started participating in like ICOs, and then I founded a accelerator in 2019 together with two of my best friends who were also like in crypto back then. We kind of just started. I'm not sure if you guys remember how it went back then, but there wasn't a lot of like, legal frameworks or any frameworks whatsoever.
Yeah, never mind legal.
Yeah,
Anything. It was the Wild West.
you just well, I have to be careful what I say right now, but you could just yeah, it was the Wild West. Yeah, so we started like a Discord group. I started going to like a lot of hackathons, a lot of conferences, build up a network, and we invested in like, I don't know, maybe 150 projects over time. About like 12 or 15 million. It was really nice. It was actually a really nice time. I also saw that the toxic side of it, then I actually saw the toxic side of crypto, or the people in crypto, being very greedy. We were scammed many times. Projects just gave us like product demos which were nothing, were just wireframes, and they supposedly had like whole backends built and smart contracts, and then they end up having really nothing, just scamming us as investors, and then a few months later dropping a token, no liquidity, and then bam, exit. Rug pull. Had that like, I don't know, 10 15 times. So my trust, because I'm a very my kind of baseline is I trust everybody. I always like have the very open, very but that kind of gave me a little I don't know, a little hit,
Yeah.
or like did some damage there, because people really exploited that our trust. Yeah, wasn't so nice.
This idea that if you can be exploited, like you will be, and you deserve it thing, that really bugs me. But at the same time, it's the awful side of crypto. Sorry, Andrew, you're going to say something there.
No, not at all. That's unfortunately the burden of these vehicles, isn't it? It's just don't have those cues, those human cues of when to jump in. Despite it's 5 years post pandemic, we're still struggling with technology. It amazes me. Anyway, Renya, I actually had two questions for you, both quite different. Something I've always actually meant to ask you, and you talk about when you started your venture fund and you spun up a Discord, but what year was that? And it must have been so early, and like you must have been really like super early with Discord.
Yeah, it was back then. I think it was just for gamers still.
Yeah.
This was in like I said, like 2019, I think 2019, 2000, something like that. I remember it was also difficult getting people into the Discord, because not a lot of people were actually using it. But it grew a lot. We had like within a few months, we had like thousands and thousands of people in there. And I would say private sales back then was just much more hot and happening. Everybody wanted to participate. Like if we would open a sale on today, like 12 hours later, people were just throwing money at those projects. It was crazy. It seems like the whole industry, including retail investors, which is a good thing, was just because they went through all those cycles, they kind of collectively educated themselves on how to invest money and how it works and how private investments work, investing, and how you can get locked up in tokens that kind of, just vaporize basically, after a few years. And I think people are much more aware of like the risks now than they were back then.
Absolutely.
Which is a good thing.
100% is a good thing. I mean, I've been working in marketing the entire time, and like I remember in 2017 during that ICO stage, kind of trying to figure it out. Like thinking, like I don't understand. Like these people are like contributing, like they're early adopters, sure. So their risk tolerance would be, let's say, higher than most people. But at the same time, there's these like ICO sites you used to see people put up, and it was like, this makes absolutely no sense. They've done, like from a marketing standpoint, these projects have done nothing to really help people understand what the thing is. In fact, if anything, they seem to be trying to confuse people enough that people just kind of go, ugh, and like, ape in.
Don't want you to read the details. Don't want you to buy the hype, but not look too deep into the, come up with a really complicated white paper or really complicated calculations to
but
mask
you read the white paper.
Yeah,
and it'd be like, that doesn't make any sense. So like, I mean, it was crazy. It was crazy the amount of money that changed hands back in those days. Like without any, like the marketing burden, let's say, seemed to be, almost insignificant compared to today. Like when you launch a project in 2025, like you said, Rainier, the average person who's going to potentially buy tokens is a much more sophisticated investor, if you want to call people that. There's a lot of, but I think there's a lot of gamblers in the space. Just aping into projects that are like, I mean, look at the whole meme coin thing. I mean, how many rugs does it take before people are like, maybe not this time, and then you've got legitimate projects with actual technology built, like, massive amounts of money invested, potentially millions of dollars invested in the application. Like, and just to segue maybe, and maybe this is a good chance to segue to talk about the rug check thing that we've had on CoinMarketCap, this rug check warning that's been there. Hivelo has invested, I don't know what the number is, and I'm probably not sharing it publicly, but I would imagine it's in the millions in terms of the amount of money that's been invested in building the Hivelo app to the point it's at right now, right? Because it's an incredibly powerful piece of software. And forget the wages and the marketing and the budget and things like that for, actually launching the token and all those other things that we've done in the meantime. But for our token, we have a warning there that's basically saying like, like 97% of the liquidity in the pools. This is the red warning that's there at the moment. Something like 97 or 99% of the liquidity in the pools is unlocked. Now, this is like about 150 grand in total value, right? Something like that. Is that right, Andrew? Something?
I think
like
so, yeah. Something like that, yeah. So yeah. I think it's sort of...
So like, yeah, red warning, like 150K is locked. Like we're gonna rug everybody for 150K after spending, like millions in development and time, and have a team of 30 people or 35 people or something like that, across development and engineering and product and marketing and partnerships. And I just think it's funny. Maybe we could talk about that a little bit, how we're all subject to the algorithms these days. In this case, it's it's one of, and I mean, obviously, like it's they built it obviously for meme coins because of the amount of rugs.
Right.
So I think it's important to have a safety mechanism. But I just think it's also kind of silly when the same set of criteria, I suppose, are applied across the board without seemingly taking into consideration the actual likelihood of something like that happening.
Yeah, I
Do
think
you guys
that
have any thoughts on?
yeah, I mean the way that they describe it is, yeah, it's a single a single score applied to every token, so they don't they don't make exceptions for they essentially they someone can't come in and say take a negative score and turn it into positive. So by in that regard, it's looking at the market impartially based upon those different metrics that they're tracking. But as you mentioned, Neil, is those kind of risk indicators are really focused on meme coins and the kind of the kind of bad actors in that space. So you have like you mentioned, for a project like ours, which involves, it's not it's not a meme coin. It's not a meme coin is basically it doesn't have really any technology behind it, or any software or hardware, or probably even potentially even a team behind it, except for someone in their bedroom somewhere. So when you take the indicators of that versus something like a DePIN project, where many are based upon the value of that project is in the network itself. So if you take Helium, for example, Helium's one might look at Helium's value is the amount of hotspots that they've deployed around the world, and the amount of consumers that are using those hotspots to consume data. So it doesn't really take into account that kind of layer for projects that aren't just meme coins. So it's unfortunate, and I think I'm just purely speculating here, but I think with the sort of rapid kind of rise of meme coins in the last say 1 or 2 months, is I think some of the platforms have sort of rushed to drop this like using a rug checker integration in to alert their users to potentially bad actors in the space. But I think it's sort of it's been rushed and not very it doesn't really consider the type of project that's it's referring to on Solana. It's basically assuming everything is a meme coin.
Yeah, well, that's the rules that it was set up under, is that, like, we're trying to protect, like you say. So yeah, just it's interesting just talking about value and the value of a project with DePIN. Obviously Bitcoin is bleeding out at the moment today. It's well, not bleeding out, but it's definitely it's taken a bit of a dump. Do you guys think, like, how do you think, I mean, let me put it like this. Let me rephrase the question. In previous cycles, we've had a situation where, Bitcoin pumps and the rest, everything else follow, and then there's an alt season, and then, everybody takes their gains from the alts and puts it back into Bitcoin, and the kind of cycle goes until it doesn't anymore. Do you think DePIN is insulated from that, like that kind of secular nature? I mean, I know there's another whole other conversation about whether or not, with ETFs and all that kind of stuff, whether or not we're in that same kind of cycle, or whether we've moved into a different, brand of cycle, I suppose. But the question I guess I'm wondering about is, like, how insulated do you think DePIN is because of the technology piece from the BTC macro environment? Like, do you think it matters a lot still, or do you think we're subject to the same cycles?
You want to take this one, Rania?
Well, I mean, there's a couple of angles there. I think, of course, there's not a lot of DeFi utility, for DePIN tokens. So I guess from a speculation kind of view, I think DePIN tokens are a little less popular for investors, or for maybe people that are just speculating. But there's this utility to it, right? Where which one thing is what is also kind of happening, of course, is that people are earning these tokens, right? So they're earning these tokens because they mine kind of the resources for a specific DePIN network, and then they get these tokens, and then if there's no DeFi utility to them, or not a lot of utility to them, then they'll just dump them on the market. Because they want to get paid for their kind of participation in the network, basically. So I think what's really a challenge for DePIN networks, and for us as well, is kind of to try to keep those tokens kind of in the ecosystems, or in the high value ecosystem. I think that's really important for us to how do you say it, to kind of avoid a lot of sell pressure. In terms of kind of the whole cycle, like, I think this one is going to be totally different, to be honest. I don't think it's going to be like a traditional Bitcoin and an alt season. Right now, I think this is a pullback. It's just a little bit of turbulence right now that we're experiencing. I think when macro stuff is going to happen, we all know what we're waiting for. So I think when that's going to happen, I think there's going to be more liquidity into the markets. But there's just, if you just simplify it, there's just so many tokens on the market right now, like so many. Not even considering meme coins, but like just in general, there's just so many projects in so many different areas. So it has to like spread out very thin, like all that liquidity. And I'm not sure if that's gonna how that's gonna play out. If it's gonna be a alt season, but more of like focus on the majors. If there are specific niches that's gonna get more attention, basically. So yeah, I think that's something we will have to see how that plays out. But I do think that like DePIN projects have, because there is so much utility, and the token plays this role in this ecosystem. I do think it has a different kind of airbag for bear markets, and also for markets that go up and down. Because there's just, for example, when there's a bear market and you're a DeFi protocol and there's no liquidity, nothing is happening, nobody is lending or borrowing anything, everybody is scared. It's just like there's no money coming into those protocols, right? Whereas if you're a DePIN protocol and you sell like a service, and you're crowdsource kind of the supply, those services are still gonna get you money, right? There's still like people in Web2 or enterprises, whatever, they pay for those services, so money flows into those ecosystems. They maybe buy the native token, burn it. So there's like economies, basically, which I think is just completely different from the DeFi and more kind of the layer 1 and layer 2s that we've seen so far. So I'm really curious how that plays out long term, and what it means for the health and the longevity of those ecosystems.
Just, if I might interject something on that, I read something in Cointelegraph a few weeks ago, or could have been last week, about this is off the top of my head now, but something like 18 billion forecast to enter the digital asset space through cryptocurrency projects, investment by VCs, and it was I think Hashkey Capital, some Hong Kong VC fund. Anyway, basically, we're talking about how the guy was basically saying that solutions that bridge the Web 2, Web 3 gap. So like DePIN, RWA, those kinds of solutions are going to, well, his hypothesis was that the market caps for those projects to be sort of hitting something like, again, off the top of my head, 20 billion in, actually, I'm not sure what the timeline on it was. But yeah, that's a lot of money flowing in from intelligent investors. So, you know, when I read that, I kind of, to me, that translated in my mind to, you know, like if that kind of smart money is flowing in to DePIN projects, to RWA projects that are going to bridge that gap, like we're always talking about in Havelo, you know, it means that if everybody in the world is running Havelo on their computer, because, for example, hypothetical situation, you know, or another DePIN, you know, they're collecting tokens, and they're also putting potentially putting, you know, on-ramping fiat essentially. So there's a liquidity flow there that doesn't exist at the moment. And as you said, Rainier, in DeFi, it's quite like it's been quite. Let's say we've needed some sort of kind of key event, some sort of catalyst to kick off an inflow of capital from, you know, new investors. Usually it's the news kicking off about something, and then a load of retail FOMO kind of pulls in a bunch of like, you know, capital into the space basically that gets put into things, and that creates these kind of altcoin seasons and stuff like that. So yeah, I guess what I'm wondering is, or at least it seems in my mind that could be potentially something that changes the paradigm of what we've had to date. You know, this kind of this idea that everybody and anybody could be potentially a crypto user. Do you
Yeah, I
guys?
think
Do you
I
agree
was
with
going to say
that?
maybe. Yeah, I think there's
Let me
one kind
ask.
of there's one kind of, you know, pretty large use case that's you know, very you know, active right now, and that's you know, training, you know, AI models, and the, you know, explosion in the demand for you know, AI model training. And I think what we'll see is, you know, I think we've had this kind of what I sort of call it, this kind of first wave of AI with obviously with ChatGPT and um, um, you know, you know, textual based models, but we can see that the next wave with being able to generate video is, you know, it's already happening now, but it's not quite to the let's say production ready versions. But you know, we can see that's, you know, maybe only months away, if not, you know, within a year or two, and that's going to trigger an exponential amount of extra demand, because if you can, you know, think about generating models based on text, and then think about models that require video generation. So you've got not just the text, but the images and the music and the sounds and all those. It's huge amounts of data compared to just text. And there's, you know, it's gonna create an enormous amount of demand for you know, hardware to be able to actually you know, power these platforms, and that is an amazing opportunity for DePIN, because, you know, there'll be the you know, well-funded you know, Silicon Valley startups that are able to pay, you know, top dollar to, you know, maybe Google Cloud or Amazon AWS. But for a lot of startups that, you know, really have to make every dollar count, the ability to use a you know, a DePIN based platform to be able to run models, and the cost savings involved in that are just absolutely enormous. And I think that's really where you could see a massive, depending on the state of the crypto market itself, but you could see a massive divergence there in the demand going and the price of the tokens going up versus the general market. I think that's potentially the biggest I guess potential case that I can foresee, in the next sort of 12 to 18 to 24 months, where the two could actually, diverge quite significantly.
And it offers like a lot of opportunity for people as well to make some money, right? Both as a kind of GPU or compute kind of participant, contributor, but then of course we also actually need to we as humans need to teach these models, right? We need to give them input, right? Because otherwise they don't learn. So you also see all these DePINs, not even DePINs, but also networks or companies that have these global networks of people just training models. They ask for people that have specific skill sets, and then they kind of answer questions. By answering questions or writing some content or whatever, they actually train these models, right? Which is also
like fine tuning. You mean like the
fine-tuning the models, but also like educating the models, like the AI models, giving them basically like if we read a book, right? Our brain kind of also kind of absorbs kind of that data, and then we're able to kind of translate it to another person's. The same thing is what those AI models need as well, right? It's like they need like input. So that's also a DePIN use case. It's not just the GPUs; it's also the humans inputting kind of knowledge and educating those models. So I think that's one of those things are very kind of different from how do you say it, from other crypto verticals, Web3 like niches. I think that's why the DePIN is kind of unique in that sense.
Are you talking as well? I'm sorry. I picked up very late on your point, Randy. But the task-based kind of work as well that I've seen, say Grasp, for example, I think is I saw in somewhere, I think in their application, that they're preparing to launch like a task-based model as well, doing exactly what I think what you're talking about is like, not only can you use your computer, like I guess passively your computer is contributing to the network, but you can
Right.
also earn an income actively if you're sitting in front of it, like helping
make
train models.
like
So it's
you can make like $30, $40, $50 per hour. There's like there's this one company, Skill AI. Not sure if you know them. It's they've been there for quite a while. They kind of help Meta, and they help Open or ChatGPT and Google and etc. All those AI models. They kind of help them train by crowdsourcing intelligence and input and whatever. And that's their whole model. So basically, you can just go to the website and say, "Hey, I want to help out. I want to kind of contribute to this, like learning this or teaching this specific AI model about what it doesn't know yet, or what it needs to do better, or like you said, like fine tune things or whatever." And it's a lot of it is just also human input, right? So task based human input, and then there's of course centralized kind of networks that do that, but there's also, like you said, Grass. I think Uprock is also doing task-based stuff. I'm not sure if they do. Sapien is one, for example. Sapien is actually doing exactly this. They train AI models with human interaction, and they reward the humans in their token. Yeah, cool stuff.
Yeah, very cool. Okay, I'm just gonna take a minute to ask everybody who's on the stream. There's about 330 people on the stream at the moment. If you have any questions for us about anything to do with DePIN or Nivelo, you can fire into the chat. all of the questions and comments are being fed through to the studio we're in here. So we will answer any questions that we feel are good questions. There has been a few already. Somebody asked about Holochain. I don't know anything about Holochain myself. Do you guys know anything about that? Or Ranier, you're the guy who knows things about projects.
Supposedly.
Do you know anything? Or
Yeah, no, for sure. Holochain is a protocol which is powered by hollow ports, basically, which are like it's an external device, like a Raspberry Pi-ish kind of device. So it's fully decentralized, and it powers kind of a cloud hosting network where people can kind of build applications and whatnot. And the hollow ports are operated by people that are ambassadors of this specific blockchain. And we are kind of exploring if we can run High-Velo or integrate High-Velo onto those hollow ports, because there's thousands and thousands of those devices globally, distributed, and they have a really good uptime, because people are just like they don't turn them off. Basically, it's dedicated hardware, right? So it's like 24/7 uptime. So we are kind of working with them and exploring if we can run the High-Velo application kind of headless on. I don't want to get too techy, but like if we can run it on those hollow ports, that's what we're currently working on. Yeah, really cool. Not sure who asked the question, but that's so the current status is that we're in exploration mode, basically, and our tech teams are talking to each other.
Cool. So somebody else asked about when airdrop. We've talked about this. We talked about this on the last the High-Velo town hall that we did with Dom about a couple of weeks ago. I'll just summarize it with the most up-to-date information if you guys are okay with that. Basically, we did a community vote. The airdrop is going to happen, I think the 16th of March, I want to say. Maybe it's the 18th of March. The snapshot's going to be taken on the 28th of February. 50 million tokens will be distributed on the snapshot day. The points will all be reset at that point, and people can begin to collect points again. That is the first airdrop of a number of airdrops that we will be doing, and other community ecosystem sort of incentive rewards type campaigns. The idea very much with the first one is to reward our beta testers for their patience, because obviously, High-Velo is still technically in beta, even though it works very well. We're still at the very early stages of gathering our data for the data lake. That's going to be, the essentially the training data for the AI, High-Velo intelligence, that will optimize everybody's mining experience for profitability, no matter where you are in the world, no matter what your computer spec is, no matter how much idle computer resources you actually have, geography, network conditions, etc. So I think that's most of the information about the airdrop. If you want to know more, by all means, jump into Discord or Telegram and ask. Our helpful mods are in there, and they escalate any and all kind of questions that they can't answer. They escalate through the rest of the team. Usually ends up either on my desk or Andrew's desk. So yeah, I think that answers that question. Let's see, we're nearly at the hour mark. Is there anything you guys want to talk about in terms of High-Velo? Anything else we should talk about, like company stuff?
So we're working really hard on Right now, of course, it's still in beta, as you mentioned, Neil, and we're working really hard on integrating like new DePIN networks. That's like my main focus right now, is to find the networks, the DePINs that offer a good reward for our user. There's a question coming in. Any DePIN integration schedule or hints for next one? So that's actually what I just wanted to say, Jack.
That's why I put it up, because you're kind of talking about it.
Oh, you put it up there. Okay. Yeah. So
that works.
yes, we have two networks that are going to be launched in on the 6th of March. It's storage DePINs. One kind of well-established one. I can't say the names yet because one is very well established and one is very new, just went to mainnet, but is really, really taking off. So we have high expectations of those networks, and you don't need like very kind of big hardware for it, like very heavy hardware for it. You don't need GPUs or whatever. It's storage, so obviously you need some storage, maybe an SSD drive. But we're very excited about these two new integrations. And then there's of course Nosana that we kind of launched a few weeks ago, beginning of this month, which is going really well actually. We have now about like 200 or 250 Nosana nodes that are earning money every day. And we're trying to kind of get more nodes that qualify for the Nosana network on board. So if you're like a gamer, you have a good high-end network, GPU card, like a 4090, 3090, then definitely install Hivelo, because you can make some good money with those.
Yeah, can I just jump in on that? Because I've seen some people ask, "Oh, I heard you integrated Asana, but it's not showing up. Why am I not mining Asana?" It's because they're not running a Windows machine with a really powerful graphics card. This is the thing with DePIN. While Havelo will like help you mine the things that are the most profitable for your hardware spec, it's not going to help you mine anything on your hardware spec, right? Because it looks at your hardware and goes, well, you don't have the right hardware for Asana, so you can't you mine that, because you're, like, for example, in my case, on an Apple Mac or something like that. So
yeah, well, we're introducing some kind of GPU AI DePINs kind of in that segment, that are also running on like M2 chips, for example, right? They make a little less. They have a bit of a lower ROI than like those high-end GPUs, obviously, but they still perform pretty well. So we're kind of aiming for the broader. We've kind of how do you say it? A broader focus where where you can use your 10-year-old Windows laptop, or when you have like maybe a couple of H100s somewhere in a data center, you can also use Hivelo, right? Because if you have like 10 H100s, and you need to find you have to update your servers every day to find the best ROI for your GPU containers. That's a hell of a task. That's a lot of work. So even if you have those H100s sitting somewhere, you can install Hivelo, and we have like a portfolio of GPU networks and nodes that we can run on your machines, and we will make sure that you get the best ROI for those H100s, right? So there's like a mining strategy for both professional kind of more rigs, but also of course the retailers that we also focus on.
Yeah, and just to speak to the schedule question, our goal, I think, is now it's a big, fat, hairy, audacious goal, to use the Australianism, but to have 50 DePINs on board by the end of the year. I mean, it's a really, really ambitious goal. We probably won't make that, but I think if we get even, halfway there, it'll be quite good. And we, like, our view is long term, so we're not trying to build Rome in a day. Use that cliche. So, but no, we won't be we won't be pulling public a schedule for integration because it's tech. It's
I'm
so
quoting
challenging.
Simon. I'm quoting Simon, who is our CTO, and he always says we're beta software integrating beta software, which is just sometimes is very difficult, very buggy, very changes a lot. It's yeah.
So next question from somebody with an absolutely awesome handle, Chrome Donkey. I love it. What's the long-term plan for the HVLO token utility? There is a long-term plan. There's also a number of things being discussed at the moment. I'm not sure how much of that we can talk about, but suffice to say that what we've put into the zeitgeist so far. I mean, Andrew, if you want to talk to this, by all means,
Sure.
jump in.
Yeah.
But like for right now, what we have in terms of HVLO is around the membership and unlocking higher reward levels, so you get to keep more of your rewards. But there are whole other discussions about HVLO becoming a much bigger part of the overall DePIN ecosystem at large.
Yeah, definitely. And if you go onto our website at tevelo.com and in the navigation, click on the white paper, we outline a few of the kind of long-term ideas and goals that we have for the token. As Neil mentioned, the short-term we have staking available right now. You can stake at stake.tevelo.com. We'll be shortly launching our membership functions utilizing the token. But then long term, we look to the token as almost as like a interoperability kind of layer between the different DePINs that your application might be contributing to, and consolidating that into one specific token. But it's a very exciting future for us. We have the first airdrop coming up shortly, as Neil mentioned. So it's the 25th of February right now. The snapshot date is on the 28th, so you've still got 3 days left to mine. So get onto tevelo.com and download now. Make sure you get as much done in the next 3 days as possible to get included in our snapshot.
Yep, absolutely. No time like the present. There's just actually something while we're talking about that, because it will matter for the future as well as for the present. Just about downloading the app and earning points essentially. A lot of people I think don't realize that some DePINs reward more if you keep your uptime to 24 hours a day, or as close to 90. I think it's greater than 98% or something like that of a 24-hour period. It's not a linear reward cycle for some DePINs. So just to keep that in mind as well, your best bet is to actually to max out your points and max out airdrops and max out mining rewards. 24/7 is your best strategy. Or as close to that as you can manage.
I mean, we could have a whole episode just on the different reward mechanisms and the way that different DePINs reward different contributors. In fact, we should write that down as an episode to go through because it's very varied and it's very varied. I'll just leave it at that without boring everybody at home.
Yeah, well, I mean, this is the thing. If you, this is the complexity. To go all the way almost back to the start, we were talking about the early days of banks. It always strikes me when you look back at something, it's wow, that was so obvious, and like they did such a good job on that, and Amazon or Banksa or some other big thing that worked really, really well, and we look at it now as just part of the fabric of day-to-day life. But back at the start, when it's an idea, before you have any product market fit or validation of any kind, all you can see are technical problems, like hurdles, and this massive technical challenge that needs to be overcome to actually build something that's going to be used. That's what I find really, really fascinating. And with Banksa, you guys obviously had that and weren't put off by it. With Havelo, it's the same, because like Andrew just alluded to, like for each DePIN that we integrate with, we have to look at, how they pay out their rewards, like what's the costs of actually getting involved? Like, is there a staking element where you have to stake their native token just to be able to access, mining on that network, et cetera, et cetera, et cetera. Like the different geographies, the different network configurations, all the different machine configurations. I mean, like, it's not an overstatement to say that the Havelo app is an incredibly powerful piece of software. I think that's a fair comment. And I'm not even a techie, so like, I'm sure Andrew, you probably have or Andrew Ranier, you probably have a much, much deeper insight into like just the pain of some of figuring out, like, I mean, we have a team now that literally researches projects, DePINs, to figure out who we should integrate with next because of the complexity of the challenge.
Yeah, I mean, I can tell you it's certainly a lot of late nights and hair pulled out trying to solve some of the technical challenges around not just delivering the product and making it work, but also making it simple enough to use. Yeah,
for sure.
Yeah, I guess one of the technical hurdles that we're currently facing, or not we are facing, but that our networks, DePIN protocols are kind of demanding, is port forwarding, right? It's like trying to, how do you get like a high value user to do a port forwarding on their local router, for example? That's one of those problems that we need to address and need to fix. Otherwise those nodes will not operate 100%. Maybe only, I don't know, 10% of our whole node pool will then kind of be able to run these nodes. But we're getting there. The port forwarding probably is going to get fixed in the next sprint, and that will also open up the gates for another a large group of other DePINs that we can look at and integrate.
Yeah, it's a great example because port forwarding it's not that difficult to think to if you're a techie, but that's not really who we're trying to. Like, if we get to a point where we have 100 million people using Havelo, or even 1 million people using Havelo, that's going to be a lot of normies, people who probably don't even know which box in the house that is their router, never mind what a port is or how to forward it. We want to be able to cater to those people, so it's important to make it like as like Andrew said at the start, a Web2 experience, something that's as easy to use as Spotify.
So we would have to have a call center with with 500 people constantly operating the phone, and assisting with port forwarding.
Yeah, it would be untenable. Okay, I don't know. Do you guys listening have any more questions for us? We're a little bit over the hour now, so we're probably going to wrap up pretty soon. If there's no more questions, somebody's asking about the rough numbers for Nasana per day that users are hitting. Jack. It's so that's such a varied. I don't know that there's an answer to that question. Just depends on the user and the machine and their geography, I assume.
Yeah,
am I right in saying that, guys, or is there?
Yeah, and if the node is actually successfully benchmarked as well by Nosana, So if it's they have two kind of groups, the community group and the premium group, and to be able to kind of receive the most jobs and the best payouts, you need to be in the premium group, meaning you have to be benchmarked, and you have to have a good latency, like a good download speed, because you're downloading all these language models. So there's a lot of overhead there. Jack asked, "What's the highest been?" I don't have the numbers here, but I guess it's also Nosana is like a task-based kind of mechanism. So it kind of works that your computer receives a task for an AI inference, and it takes about an hour or two to process that workload, and it gets paid for exactly that. It varies. It's like maybe it depends also on the token. Right now, I think the token is also a little bit is bleeding as well, but normally I guess around like $3, like $3 per hour, something like that. No, that's a lot. No, that's not true. That's for like one job. $3 for one job. That can be like 2 hours, 3 hours. So as you can see, there's a lot of different variables. It's difficult to see.
Yep. So just one other point of interest that might be of interest to people, something I'm going to try and report on. We have crossed the barrier we've crossed the 30,000 monthly active nodes on Havelo.
Mm-hmm.
So that's great news.
Really good news.
Yeah.
Don't have the reaction button like we have in Google Meet or Zoom.
Yeah,
Can't
you
do the
just clap. Yay! Okay.
Yeah, no,
You do that
I
for
don't know
real.
Yeah.
But
the
yeah,
confetti.
the graph is very much up and to the right. If this was a graph of your net worth, we would all be very happy.
I can tell you,
it's a very healthy looking graph. So big thanks to all the listeners who are also running nodes at the moment. You are literally the best. We need as many people running nodes as possible so that we can get the data and just make Havelo better and better and better and better. So yeah. All right. Well, I think that's probably pretty much it for us, guys. It's been an hour and a quarter. So this is the DePIN Coffee Hour and a Quarter episode. Huge thanks to Andrew and Rainier for joining today. We have an episode. We'll be doing this every week, as long as we can find guests and people who want to talk about DePIN, which thanks to Rainier's work, we have tons of
people
partners.
they want to listen as well.
Yeah, and of course, most importantly, that people want to tune in and actually listen. Based on the amount of people that have tuned in since 10, I'm starting to think maybe we should move it back an hour, because there's been a lot more people tuning in the last 15 minutes.
Oh, really?
Each 15-minute segment before that, I think. So anyways, we'll see. But it'll be in or around this time. Yeah, and we'll be here every week. There may not be Havelo guests on like there is this week. If not, I'll answer questions if you have them about Havelo. But really the idea is to just have a very casual conversation about DePIN and the space, and answer newbie questions, and just keep it kind of light and not too technical. So that's what we'll be doing every week. We will probably still do Havelo town halls as well, where we get more of the team, more of the C-suite on to chat about whatever you guys want to ask us, basically AMA style, about what we're doing. So yeah, it has been great. Thank you all 434 of you for tuning in. Until
Thank
next
you.
time.
Excellent.
Thanks, guys.
Thanks again, Neil, for
Thanks for hosting.
hosting.
Thanks, guys.